YouTube channel. So this is the lecture number 5 in English. So the topic for today will be your rotation of auditor. So first of all, we have to read about what is the applicability of your rotation of auditor, and the section for rotation of auditor is your section number 139 subsection 2. So as per your rules prescribed in Companies Audit and Auditors Rule 2014, for the applicability of section number 139(2), the classes of companies shall mean the following classes of companies excluding OPC and small company. Now see, they are saying that as per this your Companies Rule 2014, this section, that means your rotation of auditor, this is applicable to the following classes of companies. The classes of companies which they are trying to refer, they are referring, not trying to refer, they are referring. We will discuss it later, but first of all, let me focus on the exclusions. There are two exclusions. First, rotation of auditor is not applicable on OPC. Second exclusion is your small company. Now, students, this is one of the most important point for this topic, for this applicability point, because the exclusions is only on OPC and small company. Now, do you remember the disqualification where there was a ceiling limit? There was a limit on ceiling limit of 20 companies on one auditor, that one auditor cannot be the auditor for more than 20 companies at the same time. There we had studied about the exclusions, and the exclusions in that disqualification were OPC, small company, dormant company, and private limited company with a paid up share capital of less than 100 crore. I hope you are able to recall what I am trying to say, but let me show it to you so that you will be able to connect it easily. Wait. See, students, in this disqualification we had read this point that a person who is in full-time employment elsewhere, or a partner or holding firm appointed as auditor of more than 20 companies, other than now this 20 companies limit. That means if a person is the auditor for more than 20 companies, then he will become disqualified to become the auditor for the 21st company, right? We had studied this only. So in this also, in this 20 companies also, there were several exclusions, which were OPC, dormant company, small company, and there was one more exclusion, and that was a private limited company having a paid up share capital of less than 100 crore. But in the applicability criteria of rotation of auditor, there are only two exclusions, OPC and small company. So you need to remember this point, as this may be asked in your MCQs. So these are very small points but yet very confusing points. So I would suggest you that you should keep some sticky notes with you so that you can stick this particular point on the top of the pages. Or what you can do, if you don't have any sticky note, just draw a box here, a big box here, and just write here whatever I have told you till yet, that here are exclusions on OPC, small company, dormant company, and private limited company having a paid up share capital of less than 100 crore. And on the page of rotation of auditor, what you have to write, there are two exclusions, OPC and small company. Okay, so do not get confused, and please keep writing these small points, and please please keep your font size bigger, and use colored pens, dark colored pens, so that you are able to recall it very easily in your exams. Okay, so let's return back to the topic, that was your rotation. So here what we have discussed earlier, that this rotation of auditor is applicable to the classes of companies which we are going to discuss, but those classes of companies do not include OPC and small company. Okay, so the classes of companies for rotation of auditor include all listed company. Now first applicability is your listed company. Now there is no such point for listed company. Rotation of auditor is applicable to all listed companies. Okay, and excluding OPC and small company, this we have already read. Now the classes of companies include three classes. First is your unlisted public company having a paid up share capital of greater than or equal to 10 crores. The next class of company is a private limited company which is having a paid up share capital of greater than or equal to 50 crores. And your third is that your third class of company talks about that. See, suppose in first case or in second case, the limit, the paid up share capital is below the threshold limit. The paid up share capital is below the threshold limit. That means that in first case, in case of unlisted public company, our threshold limit is 10 crores. That means if the paid up share capital is greater than or equal to 10 crores, then only rotation of auditor will be applicable to your unlisted public company. Similarly, in your second class of company, they are saying that for private limited company, if their paid up share capital is greater than or equal to 50 crore, then only rotation of auditor will be applicable to it. But what if it is less than 10 crore? What if it is less than 50 crore? So they have included one more rule, one more condition, which is that though their paid up share capital is below the threshold limit, that though it is less than 10 crore, though it is less than 50 crore, but if their public borrowings from public financial institutions, bank, public deposits, from any source, if their borrowings are greater than or equal to 50 crores now, then your rotation of auditor will be applicable to the companies. That means they are trying to say that in spite of having paid up share capital below the threshold limits, if their borrowings are greater than or equal to 50 crores, then rotation of auditor will be applicable to them. Okay. So this is what we have discussed till yet. So here is an example. Rano Private Limited is a private limited company. It is having a paid up share capital of 42 crore. Now what was the second class of company talking about? Private limited company having a paid up share capital of greater than or equal to 50 crore. If this is that, if this is the situation, then rotation of auditor will be applicable to it, right? But in this case, the paid up share capital is less than 50 crore. So if we read only the second condition, then will the rotation of auditor will be applicable? No. But they have kept one additional condition that in spite of having paid up share capital less than the threshold limit, if their borrowings exceed 50 crores, then rotation of auditor will be applicable to them. So they are saying, but having public borrowings from nationalized bank and financial institutions of 72 crores. Now the 72 crores borrowing is greater than 50 crore. So therefore, manner of rotation will be applicable to them. Okay. To make it more clear, let me give you some more examples. If in this case, the situation was that their borrowings was also 32 crores. So will the rotation of auditor be applicable to them? No. If their borrowings is 32 crores, but their paid up share capital is 52 crores, then will the rotation of auditor be applicable to them? Yes, because it is not written and, it is written or. See, here there is no and, no or, but there are basically three classes, and if the condition is that it fits in one class also, then also your rotation of auditor will be applicable to them. That means it is not compulsory that all the three conditions should be satisfied. If the situation is getting fitted into one class of company also, then also your rotation of auditor will be applicable. So as in this case, the first condition is satisfied. That means the paid up share capital is greater than 52 crore, but the borrowings is not exceeding 50 crore, then also rotation of auditor will be applicable to them. Similarly, the example which is given, though the paid up share capital was not greater than 50 crore, but the borrowings were greater than 50 crore now, then your rotation of auditor will be applicable to them. Also, if in place of private limited company, if here was unlisted public company, then what would be your answer? See, in unlisted public company, what condition have they given? They have given if their paid up share capital is greater than or equal to 10 crores. So, it satisfies the first class of company. So, the manner of rotation will be applicable with the first class only. Though they are satisfying both the classes, that means borrowings is also greater than 50 crore, but they have already satisfied first criteria. Na? If they are not able to satisfy first criteria, then we will move to borrowings wala criteria. Otherwise, we will not look at borrowings, we will only look with the paid up share capital. Okay, I hope that I was clear to you, but still if you are having any doubt, then you can comment down. Now let's move on to further points. As per section number 139 subsection 2, no listed company or company belonging to such class or classes of companies and as mentioned below shall appoint or reappoint. Wait, let me just clear this screen as it is looking very untidy. Just give me 1 second. So they are saying, as per section number 139 subsection 2, no listed company or company belonging to such class or classes of company. Now why is it written listed company? Because the rotation of auditor is applicable to all listed company. There was no specific limit for listed company. So if in this example, if here was written is a listed company, if in place of private limited company, if it was listed company, then will we look on the paid up share capital or borrowings limit? No, because rotation is applicable to all listed company. So whatever be the situation, if it is written listed company, then rotation of auditor will be applicable to it. So please read the question very carefully and keep all the three conditions in your mind. Actually there are four conditions. First is your listed company, second is your unlisted public company, third is your public company, and private limited company, and fourth condition is your borrowings value. Okay, so there are basically four conditions: listed, unlisted, private, and borrowings. Okay, fine. So they are saying no listed company or company belonging to such class, that means no company on which rotation of auditor is applicable shall appoint or reappoint. Now that company on which rotation of auditor is applicable, that company on which section number 139 subsection 2 is applicable can appoint or reappoint an individual as auditor for more than one term of 5 consecutive years. Now if an auditor, if the auditor is an individual, so if he is the auditor of that company on which this rotation of auditor is applicable, that means section number 139 subsection 2 is applicable, then that company cannot appoint, that auditor cannot remain the auditor of that company for more than one term of 5 consecutive years. That means from the 6th year he will become disqualified. Okay, similarly if there is a firm, then that firm cannot remain as the auditor of that company on which rotation is applicable for more than 2 terms of 5 consecutive years. So it is 2 terms of 5 consecutive years. Now what are these consecutive years? We will discuss it later. Okay, but till then keep two situations in your mind, two conditions in your mind, that if rotation is applicable, if rotation of auditor is applicable on a particular company, that company cannot appoint an individual for more than one term of 5 consecutive years and an audit firm for more than 2 terms of 5 consecutive years. Okay. Now they have given some more conditions, provided that an individual auditor who has completed his term under clause A, that means if he has completed his one term of 5 consecutive years, so he shall become disqualified. Now can he be never be reappointed for becoming the auditor? No, he can be reappointed to become the auditor of that company, but he has to take a break. He has to take a cooling period of at least 5 years, for 5 years. Okay, from the completion of his term. Okay, that means if suppose I am an individual and I am the auditor of ABC Limited. Okay, so if my one term of 5 consecutive years has been completed in 2010, so now I cannot become the auditor of that company till 5 years. That means I cannot become the auditor on 11. I cannot become the auditor in 2012. In 13 also I cannot become. In 14 also I cannot become. And in 15 also I cannot become. I will become the auditor of that company. I will be eligible to become the auditor of that company from 2016. That means I have to take a break for at least 5 years. Okay, after completing my term, I can again be reappointed as the auditor, but I have to take a break. I have to take a cooling period of 5 years. Okay, similarly they are saying in clause B, that means if an audit firm has completed it 2 terms, it's 2 terms of 5 consecutive years, then that particular firm cannot be reappointed for at least 5 years. That means the cooling period is same for all. individual and firm, but the terms are different. That means the individual can be appointed for only one term of 5 consecutive years, but an audit firm can be appointed for 2 terms of 5 consecutive years. Okay, so I hope that this point is clear to you. Now they have given an example. Jolly Limited, a listed company, appointed Messrs. Polly and Company, a chartered accountant firm, as the statutory auditor. Now they have appointed an audit firm. So what is the applicability? What is the condition for this firm? They can be appointed as an auditor for 2 terms of 5 consecutive years. Okay. So students, I am going to discuss one very important point. So please pay attention. Okay, so till here what we have discussed is Mrs. Polly is a chartered accounting firm and they have been appointed as the statutory auditor of Jolly Limited. In its AGM held at end of September 2016 for 11 years. Now see what have they mentioned, 11 years. And what have we discussed? 2 terms of 5 consecutive years. That means 5 plus 5 equals 10. But they have appointed the auditor for 11 years. They have appointed the audit firm as the auditor for 11 years. So is it valid? No, it is not valid, right? Here the appointment of Mrs. Polly and Company is not valid, as the appointment can be made only for one term of 5 consecutive years and then another one more term of 5 consecutive years. It can't be appointed for 2 terms in one AGM only. Now this is one special point which I am trying to specify, is that in first AGM an audit firm can be appointed for one term of 5 consecutive years, although the total term are 2. Okay, but the AGM should also be different. That means in one AGM only one term of 5 consecutive years wala firm can be appointed. Then if that firm is to be reappointed for the second term also, then another AGM should be held. Then that should be appointed in the second AGM. Okay, so for both the terms, for one term of 5 consecutive years, first term 5 years in first AGM, then second term of 5 years in second AGM. So there should be 2 AGMs. There should be 2 separate meetings held for both the terms of 5 consecutive years. Okay, so they are saying that it cannot be made for one term of 5 consecutive years, and it can't be appointed for 2 terms in one AGM only. For both the terms, there should be separate AGMs. Further, a cooling period of 5 years from the completion of term is required. That is, the firm can't be reappointed for further 5 years after completion of 2 terms of 5 consecutive years. That I've already told you, that if they have completed their 2 terms of 5 consecutive years, because here it is a firm, so it can be appointed for 2 terms, right? So if they have completed their 2 terms, they cannot be appointed as the auditor of that company for at least 5 years. That means they will have a cooling period of 5 years. Similarly, the cooling period for individual is also 5, but the individual can be appointed for only one term of 5 consecutive years, and the audit firm can be appointed for 2 terms of 5 consecutive years. Okay. The following points merit consideration in this regard. As in the date of appointment, no audit firm having a common partner or partners to the other firm whose tenure has expired in a company immediately preceding the financial year shall be appointed as the auditor of the same company for a period of 5 years. Now this point I will explain you through this example. In this example, they are saying Mrs. XYZ is an audit firm having partner Mrs. X, Mr. Y, and Mr. Z. So the audit firm is XYZ company, and here the auditors are, their partners in this firm are X, Y, and Z. Okay. Now what happens is, in this firm, this audit firm has completed its 2 terms of 5 consecutive years, and so the tenure for all the partners, that means for all XYZ, has expired for 5 years. Means the cooling period has started for XYZ and Z. They cannot be reappointed as the auditor of that company for at least 5 years, right? So they are saying that this has happened. Now what happens is, another audit firm which has ABZ, that means ABZ and company has 3 partners A, B, Z. Now this Z is this Z only. That means Z is a common partner in both XYZ and ABZ company. So they are saying that can the audit firm ABZ be appointed as the auditor for the firm for which XYZ and company is expired, for which the tenure of XYZ and company is expired? So the answer is no, because XYZ company has three partners, X, Y, and Z, and the tenure for all the three partners is expired. Now, if you will take ABZ, then either you have to remove Z from your firm, or if Z is included in your firm, then the tenure will be deemed to be expired for A also and B also, because Z is a common partner in your firm, and because his tenure has expired, you cannot appoint him. You cannot make him appoint as our auditor. Okay, so Mrs. ABZ, another audit firm in which Mr. Z is a common partner, will also be disqualified for the same company along with Mrs. XYZ and company for a period of 5 years. Okay, I hope that you were able to understand this point. Now let me explain you the text. So they are saying that as in the date of appointment, no audit firm having a common partner. That means if the new audit firm is having a common partner of the old audit firm whose tenure has already expired, then that new audit firm can also be not appointed as the auditor. Okay, whose tenure is expired in the immediately preceding the financial year shall be reappointed as the auditor of the company for a period of 5 years. That means that firm will also be able to that firm can also be appointed as the auditor after the tenure of Mr. Z, or you can say the common partner will expire. That means the cooling period, the tenure of cooling period of 5 years will expire, then only that particular firm can be reappointed. Okay, so this was the point which we have discussed till yet. Now, every company existing on or before the commencement of this Act, which is required to comply with the provisions of this subsection, shall comply with the requirements of this subsection within a period which shall not be later than the date of first AGM of the company held within the period under subsection 1 of section 96 after 3 years from the date of commencement of this Act. Now, they are saying in this point, they are talking about those companies which were started before the commencement of this act. That means before the commencement of this Companies Act 2013, and on those companies at that time no rotation of auditor, no section 139 subsection 2 was applicable. Now those companies already exist, but section number 139(2) has come after Companies Act 2013. So what about the companies before that? Right, what about the companies that are existing before this act? So they have given one, you can say, one advantage or one relaxation, that you can continue with more than one term or two term as the case may be. That means one term in case of individual and two terms in case of auditor, but you have to conduct one annual general meeting. So that means they are saying that you can continue with your firm. So they have also exceeded the terms. Okay, wait, let me explain this point again. I guess you might not be that much clear. See, in general, in section number 139 subsection 2, what are the conditions? That an individual cannot be appointed for more than one term, and an audit firm cannot be appointed for more than two terms. Okay, so these conditions are after the rotation of auditor has come. That means after the section number 139 subsection 2 has come. That means after the Companies Act 2013 has come. But what about the companies that are already existing before these conditions have arrived? That means before the Companies Act 2013 is made. So they are saying for those companies we have given one advantage, that they can continue to be the auditor. Those auditors can continue even after one term or two terms. That means those auditors or those audit firm can continue till the first annual general meeting. Till the first annual general meeting, those auditors can continue to be the auditor in spite of the fact that their terms have expired, their terms have exceeded, but still they can continue to be the auditor till the first AGM is conducted. Also, they have given a situation that till when will is it compulsory to conduct a first AGM? Till the 3 years from the commencement of the act. That means within 3 years you should conduct one annual general meeting, and till that annual general meeting is conducted, the existing auditors can continue to be the auditor of the company. Okay, so they have given two examples to make you clear this point. Example is Mr. Raj, a chartered accountant, is an individual auditor of Binaka Limited for last 5 years. That means his one term of 5 consecutive years has expired. Okay, but this company existed before the commencement of Companies Act 2013. Now, because this was an existing company, they have given one advantage. So, keeping in view the transition period as stated in Companies Act 2013, Mr. Raj can continue to be the auditor of Binaka Limited up to the first AGM, and that first AGM should be held after 3 years from the date of commencement of the Act. That means from the day Companies Act 2013 is commenced, within 3 years of it, the first annual general meeting should be held. Until the annual general meeting is held, the existing auditor can continue to be the auditor. But after the first annual general meeting is convened, then those auditors will be disqualified, or you can say their cooling period will start. Okay. Similar is the situation for this audit firm. So they have written that Mrs. Raj and Associates, a chartered accountant audit firm, is doing audit of Binaka Limited for last 11 years. Now, although the after the rotation of auditor has come, they are allowed only for 2 terms of 5 consecutive years. But because these were existing company, so there will be no penalty or no disqualification to them. But they have to comply with the provisions of this Companies Act. With the by conducting first annual general meeting. So till the first annual general meeting, this audit firm can be the auditor, and after this annual general meeting will be conducted, this will become disqualified, or the cooling period will start for 5 years. Okay. And they have also mentioned this fact that this first annual general meeting should be conducted within 3 years from the date of commencement of the Act. Okay. Now they have written, it has also been provided that the right of company to remove an auditor or the right of the auditor to resign from such office shall not be prejudiced. That means whatever be the situation, an auditor is always free to resign, and a client is always free. That means he has the power that he can remove his auditor. Subject to the provisions of this act, members of company may resolve to provide that in the audit firm appointed by it, the auditing partner and his team shall be rotated at such intervals as may be resolved by members, or the audit shall be conducted by more than one auditor. And the CG may also prescribe the manner in which rotation should be held. Now, these points will be clear to you when we will discuss the manner of rotation. Okay, so just wait, and I will return back to these points if it will not be covered in your manner of rotation, but I hope that you will be easily able to understand after we will discuss the manner of rotation point. Okay, so I'm ending this video here only, and we'll cover the manner of rotation of auditors in the separate video. Okay, so that will be covered in your lecture number 6. So till then we have completed 5 lectures. I hope that you are getting benefited out of it, and if you're really liking my videos, then please do press the like button. Please subscribe to this channel to receive more such videos, and please comment down so that I may also know that whether you are getting help by my videos or not. So ending this video here, and thank you so much.